Hello and welcome to BQ Prime. You're watching Earnings with BQ, and our guest today is Mr. Siddharth Mittal, the MD and CEO of Biocon. Welcome to the show, sir.
Thank you.
So, you had a strong quarter four and ended the year on a strong note as well. So, what has gone right? What has aided the revenue growth? How has it been?
So quarter four, we closed the quarter at almost 4,000 crores of consolidated revenue, which was up 59% compared to last year. And if you look at the underlying performance, Biocon Biologics or our biosimilars business grew by 114% as we got the full year impact or full quarter impact of the acquisition
Yeah.
we did of the business from Viatris. Also, our research services segment or Syngene grew 31% this quarter with a very, very strong performance of 994 crore. So that led to a very strong performance in fourth quarter.
So now, how do we look at the margins? Because the margins have been good, at least in this quarter. I mean, they've grown, they've beaten estimates as well. So, is it possible for us to be able to maintain these margins? What will be the margin guidance, or do we see a northwards going forward?
See, I would not necessarily guide for a northwards margin in the coming year. What we expect that margins would be in the range of 35 to 40% as far as the core EBITDA margins are concerned.
Okay.
And we definitely hope that it is on the higher side of this range. But when I look at the investments in R&D, it's expected to be roughly 12% of our revenues ex Syngene in the coming quarters. So we've had a strong quarter with good margins, and we definitely expect that nothing significant should change in the coming year.
So a question on R&D as well, since you brought it up. Where is the additional investment going? Because from what I understand, you've doubled the R&D investment.
Okay.
So how and where is this going to go, and what sort of a pipeline are we expecting going forward?
See, we have a very strong pipeline of biosimilars and generic drugs. We do have three assets in clinic in biosimilars. These are biosimilar ustekinumab, biosimilar denosumab, and biosimilar pertuzumab. As you will understand that once the drugs are in phase three, there are higher spends. We of course had many other drugs which are in early stages of clinic or early stages of development. So cumulative expenses are on account of both the three assets which are in phase three and other assets which are in phase one or preclinical stage. And we expect to make progress, and that's our pipeline. So we'll continue to invest in R&D in the years to come because we do see a very good opportunity for biosimilars over the next decade or so. And we, as being a leading biosimilars company, we will have to continue to invest in R&D. So some of the current programs will get over as far as phase three is concerned, but the following programs will enter phase three.
Okay. But so when are we expecting these products, I mean, revenues to flow from this R&D investment that we are doing? Is it over a period of, say, like you said, it's spread out over a decade, but, when do we see the first batch of products coming out and revenues flowing
I did mention the names of the product to stick
Yes.
in map. Recently we have
Yes.
heard a settlement done between Amgen and the innovator for a launch in 25. So from that, you can get an idea of when that product is expected to be launched.
Mm.
I mentioned denosumab. Again, it's in a similar time frame.
Okay.
Pertuzumab might be a little bit later, but it's all dependent on the product approval and the IP situation of each molecule. But we do definitely what we have guided for in the past is that we expect one launch per year to contribute
Okay.
to the growth of our biosimilars business.
So we expect a launch in FY24.
FY24, we have a launch upcoming for biosimilar adalimumab. So that's under a
Okay.
settlement with AbbVie that launches in July of 23. And apart from adalimumab, we also expect that we are able to get approvals for biosimilar aspart and biosimilar bevacizumab in FY24 and are able to launch these two products at least at the later part of this fiscal.
So what's the update on Revlimid?
We have already got the approval for Revlimid last month, tentative
Hmm.
approval. We do have a settlement with Celgene. It's a confidential settlement terms. No, I cannot give exact dates, but we do have a limited launch, which will be there in the not in this fiscal in FY24,
Okay.
but will be in the following fiscal.
Okay. So what is the kind of revenue growth that you're expecting the year? I mean, with the new launches and also on the base business, because Beatrice really inched up the margins this quarter. So how is it? How is the base business doing? And what sort of growth do we expect on all fronts?
See, from a biosimilar segment perspective, we've
Hmm.
already completed the $1 billion
Yes.
revenue run rate in quarter four. So you can already see that we've hit that 1 billion run rate. And what we have said is this is the base, and the growth on this will come from, of course, getting additional market share on existing products which are in the market, uh,
Hmm.
geographical expansion in emerging markets and Europe for the existing products. As far as the new launches are concerned, adalimumab, which will be launched in July, will contribute to the revenue growth. And again, if once we are able to launch aspart and bevacizumab post FDA approves these two molecules, we'll also see some. It should not be significant, but at least some effect of these two launches during the year. Now, I cannot give you exact revenue guidance because there are still some moving factors. As far as other two businesses are concerned, in generics, we are guiding for a mid-teens kind of growth level next year, coming from additional API sales for the capacities that we had created last year, plus
Okay.
some of the generic formulation launches that are going to happen in the US, and again expansion of our existing base products in the US, where we have already secured some contracts for FY24, which will aid to
Okay.
the growth. And Syngene has guided for a high teens, low 20s kind of growth. So when you look at consolidated effect of these three, we
Hmm.
should see a very healthy growth next year.
Okay, sir. And so there has been some mention on some cost pressures that we've been witnessing through the year. So have they eased? How is it going to be in the year ahead?
See, cost pressure is always there, and the cost pressure comes from two different angles. One is there is a pricing pressure on our products
Yeah.
that we sell to our customers, and
Hmm.
to continue to stay profitable or retain our margins, we have to continue to reduce our cost, and the cost reduction happens by way of CIP or the cost improvement programs. But we have seen in at least in last year, there was an impact of increase in raw material cost, increase in
Yes.
solvent cost, increase in natural gas cost, increase in freight cost. So some of these things, we have seen some rationalization lately, where the costs have gone down. In certain cases, the cost continues to be high. And in certain cases, while the cost continues to be high, the measures we are taking to offset the impact would take some time to show results. So, that's why it's important always to be ahead of what others are doing and continue to focus on cost improvement programs. So we expect, some the initiative should start showing results, and that's why we are also guiding that the margin should be in the higher
Hmm.
range of the 35 to 40%. But again, there are uncertainties out there, so that's why we also expect that in worst case the margins would be lower at the
Okay.
35% range.
And so overall product mix, is it going to be similar to what we've seen in Q4? It's 50% from biosimilars. So is that what we are targeting? I mean, is that going to stay, or are we going to see a bump in the API generic revenues as well?
No, I would expect the product mix should be very similar, because generics
Okay.
business, if it grows, let's say mid-teens, and
Yeah.
biosimilars grow in high teens to low 20s also, I'm saying on a very conservative basis,
Hmm.
biosimilars as a percentage of overall revenue will continue to be at similar levels, or in fact higher.
Okay. 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 And so there is this very small portion of novel biologics. It's been growing quarter on quarter as well. So could you throw some light? And is that also going to grow as a bigger segment?
The novel biologics is not really a revenue generating segment. I think there is some cross charge that happens to our associate Bicara, and that gets accounted there. So as of now, the novel products on the novel drugs which are being commercialized mostly in India,
Hmm.
which are nimetuzumab and itolizumab, they are captured under biosimilar revenue segment.
Okay.
In the future, as we
Yeah.
commercialize through our partner Equilium, the revenues would come in the novel biologics segment.
Okay. Thank you so much, sir. It was a pleasure speaking to you.
Thank you.
Thank you.
Thank you so much.